Now, after last week's rally, a lot of retail investors are really excited about some of the gains that they are witnessing in most of the stocks. I mean, after obviously we saw the Federal Reserve increase interest rates by 25 basis points, we saw quite a number of stocks surging in terms of the share price. Some of the stocks or most stocks are still trading very high, especially year to date, which is something that obviously is exciting a lot and lots of retail investors. But is this rally really the bull market? That is something that I think as a retail investor you should definitely ask yourself, which I think as per my yesterday's video I did indicate that it is not, or it might not be the bull market that so many of the investors are probably waiting to see, because the current economic conditions in the US are still bad. Inflation is still high. The Federal Reserve is still increasing interest rates, which is why most analysts are still projecting that we are not in the bull market yet. In fact, some stocks, most stocks, or the entire market is still going to go down or plummet. Reason why is because of inflation and interest rates that are still coming. In fact, some analysts are predicting that in the US we might experience a recession, which is something that obviously that again it's a very bearish signal to the markets. Now you will know that obviously as per my yesterday's video, after the last week's rally on Friday and Monday, I think I sold a lot of the shares that were on green, because I know that of course those are the returns that obviously were good at a very short space of time. So I sold almost all my stocks which were obviously green, because I know that obviously we are not in a bull market, as the current economic conditions in the US are still bad, which is what even led me to do yesterday's video of saying that on one stock that made me over 21,000 rand, I found myself selling that stock completely, and that is a stock that of course was SoFi Technology. I mean, right now in my stock market portfolio, you'll notice that 36% is funds available for me to invest or to load the boat. Now, these funds came about me selling those stocks that obviously did really well for me, and I saw good gains, and obviously led me into taking my profits to or selling my entire holdings, because I know the markets, we are not yet out of the spider web, or we are not yet out of the bear market due to the current US economic conditions, which obviously then led me into selling my holdings and have these 36% as available funds to invest. Now the 63% is the equities which I still own, and these equities, most of them are the ones that obviously, even though the last week's bull markets, they are still on red. So I'm not willing to sell my stocks on red, because then I lose some good money. So these are obviously the stocks that are remaining or in my portfolio, and the rest or this 36% is the money that is now available for me to load the boat at obviously the next opportunity. Now, one thing that is leading me into say that now is not the right time to buy US stocks is obviously the current economic conditions, which obviously I have said that it's inflation, interest rate hikes, which as long as these two are still in our midst, we are definitely going to see the market continuing to tremble. I mean, obviously the US Federal Reserve is targeting inflation to be at 2%. That's their target. So they are targeting inflation to be somewhere between 2 and 3%, which obviously, looking at the fact that inflation in the US is still over 6%, just has to show you that they are still very far from their target of at least having an inflation of somewhere around between 2 and 3%. Now, obviously, getting that, of course, the Federal Reserve is aiming or targeting this 2%. Ladies and gents, we are still very far off from that, and that will definitely mean that we might still get some good rate hikes in the near future, which, ladies and gents, might lead into the US going into a recession, which that is not good to the stock market. So personally, I'm just very observant, or in the rest of this Q1, I don't think I'll be buying any US stocks, or I don't think I'll be buying stocks at all, because I know even here in South Africa, the inflation is still very high, and the target in South Africa, or the Reserve Bank in South Africa, they are targeting an inflation of somewhere between 3% and 6%, and inflation in South Africa is still over 7%. So in the same situation as the US, which is why I won't be buying any stocks for at least the first quarter of this year, just to observe the kind of maybe improvements when it comes to inflation, because I know that the Federal Reserve Central Bank, they are going to continue increasing interest rates to get inflation where they want to be. And I'm not surprised why a country like the US is targeting that 2% inflation, because their threat, which is China, ladies and gents, their inflation is even below 2%. So it makes sense why the US would want their inflation to also be at 2%. I mean, I think Mr. Powell indicated that the standards, or the global standards, is of course to have inflation at 3%, which is why it makes sense that they are at least targeting that 2%. Now, what will make, I think, the US to be more aggressive and make sure that it comes to pass getting that inflation to 2% is obviously, as I'm telling you, the fact that China's inflation is below 2%, and as China is US threat, they'll definitely make sure that their economy stabilizes like China. So I am not buying anything, I'm not loading the boat, because, ladies and gents, I believe that the current economic conditions are still bad, or are still bad for one to probably throw in the money in the markets. I was very excited about last week's rally. I showed some of my returns. I mean, I had to sell all my holdings of Alphabet. I think Alphabet I sold on is it Monday or Tuesday, when it hit $1.07. And those of you that have been following me for some time, you know that my average on Alphabet was $98. So I had made over a good 10%. I had made, I think, over 11% of gains. So that again, it ended up me selling my entire Alphabet holdings. And Alphabet just yesterday, or Google, you'll notice that it fell down, or finished the market down 8%, which is something that must just show you that it was a good thing for me to sell. SoFi Technologies, which is the stock that generated me 21,000 Rand, I sold my entire holdings, and guess where SoFi Technologies is right now? Yesterday, again, it finished down 2%. Day before yesterday, it finished down another 2%, which is, again, it was a wise decision for me to sell the stocks that were doing really well in my portfolio. So I don't regret selling those stocks as now, especially for a stock like SoFi, which is a stock that obviously it's really close to my heart. I'm looking at buying in, or having my average onto that stock at $5. And as you know that before I sold the stock, my average was at $7.05. So at least now, during the bear market, or if we are to get this stock plummeting towards the 52-week low, which is below $5 per stock, it gives me an opportunity to finally have my average into SoFi around $5 per stock. So I'm really excited about the opportunities that I will get in the markets, due to the fact that I sold the stocks that were generating me good returns. Personally, I believe that I'm going to definitely get that opportunity to buy the stocks, or the same stocks which I own, like Nvidia, at a very good, reasonable price. So I'm really excited about what's coming, because though to some others it might be resulting as panic, or the bear markets might result in panic to some others, to me, I'll be taking those opportunities to scoop more shares, to add these companies which I had sold due to the returns I saw last week. So otherwise, I believe that right now maybe might not be the good opportunity, or the good time to buy stocks, as obviously we saw, or we are seeing, of course, Federal Reserve, central banks planning to continue increasing interest rates, and that, ladies and gents, will definitely harm the market, or harm the stock markets, which will offer opportunities for those that are investing in the stock market for a long term. So I'm still a long-term investor, or I'm still investing in stocks for a long term, but just the last week gains, it led to me selling most of my stocks because I know that the economy is still bad globally, which is something that obviously might result in the markets to even drop or visit their 52-week lows, which obviously we saw in 2022. Otherwise, we already know that this video was just an entertainment video and not a professional financial advice video. Now, I really appreciate if you can just hit the like button if you did enjoy this content that I was giving you about the current market condition. What is it that I did, and when am I actually planning to buy? Which obviously, if you enjoyed, like I said, hit that like button as it helps with YouTube's algorithm. If you have not subscribed to the channel, please consider subscribing and hit that notification bell so that you don't miss the good content that I offer or I do almost on a day-to-day about the stock markets. Otherwise, with all that, guys, that's all from me, and I wish you nothing but the best in your stock market investing journey. And like I said, this was just an entertainment video and not a professional financial advice video. I still believe that we will see the bull market as soon as inflation, especially in the US and here in South Africa, of course, get to the target or stabilizes, which is in South Africa it's somewhere between 3 and 6%, whereas in the US they are targeting an inflation of around 2%. So as long as we have not gotten to those levels in the US and in South Africa, definitely we are going to continue seeing, of course, rate hikes, which will be there to make sure that the inflation goes back to the brackets which the Federal Reserve or central banks want. Otherwise, that's all from me, and God bless you all.